So the Bitcoin price today is $19,157. We have our quarterly close and an outrageous thumbnail today. Now, what exactly does this thumbnail mean? Well, I did show you guys on yesterday's stream, and I again want to just apologize for the bad internet connection. Hopefully today we have everything sorted. We did test it all out. But look, here is the quarterly close. We finally have it. It closed as a massive red bearish candle. And look, for anyone that understands technical analysis, this chart doesn't look good. I've marked out a couple of important areas prior to these lows at 13,880. It's going to be most notably at the top over here. So you're welcome to do the same thing on your chart. If you put your Bitcoin chart onto a 3-month chart, what you can do is mark out the $28,992 level, which is this one over here. If there is any sort of a major bounce, then I would expect that it would get faded around that level. And this is now, I'm talking much more macro, of course, time frame. And I wouldn't be surprised to see us stuck in some sort of a range. But at the end of the day, everything remains with risk to the downside. The next thing that you want to do is you want to mark out the Bitcoin 3-month wick low. And the way that a range trader would typically work is they'll mark out all the important areas from the previous month or the previous 3 months on a quarterly chart. For Bitcoin, you can probably do it on a monthly chart, which I'll switch to now. And that's probably going to be the range that Bitcoin is going to play around within over the next month. But any loss of this lower wick area, which I do believe will probably happen over the next quarter, will take you straight down to the $13,880 level. So that's now become much more of a reality. And it's going to look the same here for Ethereum. You've got your lower side. If you mark the wick low of the previous quarter, let's actually do that right now. You put your magnet on, set that over there. It's coming in at $880. If you take out $880, you're probably going to accelerate straight into that $743 region. And I really hope that we bounce from that level. Otherwise, crypto is in much more trouble than most of us would want to admit. So with that being said, let's quickly move it on to a monthly chart, and I will show you exactly what I mean. So what you want to do is you kind of want to get the overall range, right? So you're going to take, again, your chart like that. Look, between the wick and the body is so marginal. I mean, I don't even know if it's worth marking it out. Let's try to get that a bit bigger. Okay, great. So you got that level, got this level. Now, this is your main levels that you're going to be working within on Bitcoin. So the range is enormous, but at the moment, it's already, the way the new month is opened, we're already below that, right? And if I put on the monthly RSI, I want to show you this. Okay, well, that's not too bad. It's actually ticking up a little bit, which that wasn't yesterday, but you had to get the monthly close to see what sort of, if that slope is going to continue down aggressively or change. But if you have a look at the whole history of Bitcoin, pretty much from inception, this chart runs from October 2012. You can see that the RSI, which is the white line over here, has actually never been this low. Now, what you really want to be looking for is you want to see this RSI on a high time frame. You want to see it start to tick back up like this. And more importantly, if it can reclaim these areas that were the previous lows, whilst simultaneously price is hitting a major area of, let's say it is this area, let's say that's the major area of support. If those two things happen simultaneously, then you can maybe say, well, the bottom is in. But at the moment, this RSI is still angled downwards. It hasn't quite turned up yet. And unfortunately, we won't know until the end of this next month what's going to actually happen, if it is going to angle back upward. So risk still does remain to the downside. However, this may be a good buying opportunity. Over the course of July, it may present the final capitulation and a great opportunity for long-term bets. But follow me on Twitter. Make sure that you have a look at my Twitter account. I will keep you up to date with my every move. If I do add to long-term positions, I'm very transparent with everything. I'll let you know on Twitter with anything that I do. Okay, so Ethereum is going to be the same. The RSI looks the same. I'm going to move on to this chart over here. Let's have a look at the weekly chart. Having a look here at the weekly chart, what I did is I highlighted in yellow the main liquidity zone, which is where I believe would be the best bottom area to be buying, and that's going to come in between 10,100 and about 12,000. The key yearly level matches up with the previous chart that I showed you here on Bitcoin, and is what the thumbnail says, right, at 13,880. So the way that I'm playing it, so because, I mean, what does all this information actually mean to you if I don't explain what I'm doing? So what I'm doing is I'm kind of watching on the high time frames, and then if price starts to approach the levels of interest, I'll move on to a lower time frame chart, and I'll try and reassess, okay, what's exactly going on here? How do the momentum oscillators look? How is the sort of the volatility? Is the volatility expansion phase almost finished, meaning that things need to start cooling off and there could be a potential bounce in play? So what I plan on doing is looking at these key horizontal levels specifically, and if price does get to this level and volatility is low and it still looks like there could be an expansion with high volatility to the downside, then I probably won't take a bid. But if all the stars align for me, volume is picked up, we went through high volume, funding rates went extremely negative, meaning everybody and their mother was shorting the market, then I would say, well, maybe a move like that into that support level would signal a long-term buy. But if I'm not seeing those signals, I probably still won't buy this $13,880 level, and then I'll be looking lower at the next level, 10,760 and so forth. And I've said this on my Twitter before, I'm not entering the market unless I see one of two things. Either we reestablish a proper uptrend or we have a capitulation candle. And I know a lot of people are calling this capitulation, but it's not capitulation yet. The price has gone down damn far, but it's still not capitulation because it's very low volume, no negative funding rates or any of those metrics that I'm looking at to signal an absolute bottom. Now, that doesn't mean that price can't have a major bounce. You can actually expect that there is a good chance that price reclaims this level over here, pushes back up to the 30K level, which is where you would set your next major low high, and then maybe sometime towards the end of this year or even going into next year, you tag those levels. Like we aren't fortune tellers over here, contrary to popular belief. We're just taking each day as it comes and trying to work with what the chart presents to us. But at the moment, what the chart presents to us is looking at this level over here. In order to determine the strength of a certain area of support and resistance, you want to see what the psychology of the market was at that point. And what I mean by that is you want to ask yourself how much time was actually spent at those levels. If you have a look at this chart over here, you have a weekly close, so that's one. You had the next week that opened, that's two. I mean, we can pretty much just call that those two together as 1 week's worth of price action at those levels. We move over, this is the gray liquidity box. You got week, so we combine those. We said that's 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks over there. And now we've come down back to those levels, and that basically the history of it is there's 6 weeks of price action there. So for an asset that is over a decade old with only 6 weeks of price action, you can say it's probably not the strongest level in the world. And what is that level? Pretty much this level over here between 18 and 20K is probably not the strongest level in the world. So you want to look for the next strongest level. Well, here we have the key yearly level. Again, not that strong, only a couple of weekly candle closes there. Price, as fast as you go up through those levels, you can come straight back down through those levels. So the next strongest level of support is the yellow box that I've outlined over here, which is coming again between 10,100 and about just under 12,000. You can round it up and make it 12,000. So call it 10 to 12,000. It's a $2,000 range. Now, what happens is these levels work almost like magnets. They tend to attract the price into that zone over time. And it doesn't matter what the narrative is in the market. This is just the way that it typically works, is it tends to work like a magnet and draw price into that zone. So this would be your best place to go in heavy with long-term bids. Even though here it seems like, oh, wow, we're so far down, prices low. It's like, wow, never ever will we see 40K Bitcoin again. Then never will we see 30K. Never will we see. And so they keep changing the numbers. But this would probably be your best level for a long-term investor. So I'm not going to harp on this too much. At the end of the day, price has now, it's pretty much, let's see how the week closes. But you can also look at CME today. Let's actually go straight to CME right now, see where that's at. Because the CME doesn't have as much history. That's why these moving averages kind of just fizzle out. But nevertheless, the CME is still below the 200 MA, and it looks like it's probably going to close its third week underneath there, which has never happened before, right? But not only are we going to close the third week under the 200 MA, we're probably also going to close, if it stays at like this, under the 255 MA. And previously, we've only wicked below that area once, and the second wick wicked into it and bounced straight off, like you can see over here. So you're looking at the orange one. If I just expand that, you wick through it, the second one wicks into it, and then that kicks off the next major rally. That's not what's happening now. That's not what's happening at all. Like, look, we've wicked through it. We had the next one that stuck between those two important MAs, and now price is currently below that. So what you want to look out for is you want to see what happens at this level. If you start to, firstly, this was bad already. You lost the previous week's wick low. I knew that was going to end badly. So once that happens, you want to see now, is it going to start to price start to reject off of this orange? So if you just imagine, if you extend that orange 255 MA, price starts to reject off of that, come down and reject off of this liquidity box, then you can say with probably high probability we're going into the 15K region. And as mentioned, I'll reassess on a lower time frame whether that is a buy or not. I can't tell you at this exact moment. I need to see it while it's happening. So I think that's it for Bitcoin on the higher time frame. Let's have a look at what the dominance has been doing. So dominance trending back down again. So I guess some of the altcoins are probably pumping. I haven't even looked at those, but I'm still expecting that 42.74%, a bounce off of that, reclaim above the mid-range, target back to the top of the range, and then possibly even go higher after that. If it breaks above this range high, then Bitcoin, then the Bitcoin dominance is most likely going to target this area over here, which is as high up as about 62%. And these things typically happen at the absolute depth of a bear market. You know, when people are giving up all hope on altcoins, and most of them by that point would have gone to pretty much zero. Let's have a look here at the DXY, which is the dollar index. Okay, you can see it's fighting that level, has wicked and pierced through it. So that probably means it's more than likely going to close above that level in the next couple of weeks, but still in a solid uptrend. Can look at the NASDAQ, red candle, the weekly candle's red over here as well. I'm still expecting lower targets on that. Let's look at the S&P 500. Same thing over there. And I just want to put something into perspective for you as well. We'll go into the futures because it trades a little bit more. Put that onto a 3-month chart. And just to give you a bit of perspective, it doesn't look good, right? I mean, you can correct me if I'm wrong, but it looks like your next major support level is coming all the way down there. And I know some macroeconomists are calling for like the greatest crash of all time, like Harry Dent and them. I'm not saying that, but at least another 15% or so on the stock market before I even think of bidding on Bitcoin. So that's it for that one. Let's have a look at this chart over here. You officially have your moon, the all faithful moon phases. For those of you who have asked me on Twitter, all you have to do is type in MP under your indicators over here. So just type in moon phases. It will come up. It's a free indicator. Anyone can use it. Typically lasts for about 2 weeks before you get the bull cycle or the bull moon. I don't know which one's which, if it's full moon, new moon, or any of those things. But if you have a look at any of those so-called bull moons, the best that they've provided is a sideways price action. There's been absolutely no relief. So I recommend using this in combination with the overall trend, which is clearly down. And you'll see a lot of confluence. If I forget the moon phases, I mean, that's not important. We can take that off. I just want you to have a look at this as a general daily chart. You can see you had your primary area that you needed to clear, which I mentioned yesterday. We're now kind of consolidating into that next zone. And my expectation is that it's probably going to flip this previous area of support into a new area of resistance. So price might mess around in this area. And I mean, these horizontal liquidity areas are very, very important to get back above, and more important than what these diagonals are. So anytime that you're taking trades, I really encourage you to try and focus more on finding the strong areas of support and resistance on a horizontal. Okay, yes, someone says finally somebody telling the truth. Well, I know that it hurts, guys. It's like we spoke of before in Rand Show, it's cognitive dissonance. Nobody wants to admit that things can get much worse, especially, when you heavily invested and you now have to come to the realization that your bags could go down much more, which brings me actually onto the next point. Before I go into that chart, I wanted to show you this. I did try to show it yesterday, but I think the stream bugged out. And it's essentially, when you make your investments, you need to consider what is the percentage loss and then what is the percentage gain that's required in order to regain those losses. And you can see if you just take the first one, you lose 5%, you have to gain 5.3. So a lot of people think, oh, you lose 50%, you just need 50% and then you're back. No, you won't be. If it went up 50%, you're actually only regaining 25% of those losses. You need 100% gain to regain your 50% loss, and so forth. We go to 95% loss means 1,900%. So many of those altcoins will most likely never reach their all-time high. And as a professional investor, speculator, trader, whatever it is that you aspire towards becoming, you really want to limit your losses as much as possible. From the books that I've read, the lowest that you want to see your portfolio go is in the region of about 25 to 30%, and then you just pull the plug no matter what, because regaining 42%, 43% is possible. You can do that in a year, maybe even in 2 years if you're not that great an investor. But when you start getting to these numbers at about 70%, 80%, to now get 400% back just to break even it's a big ask. That what happens typically is you'll start to take much higher risk bets, and then you'll probably lose all your money even quicker. And I've been there. I've been through that cycle before, and I retweeted this from Al Capo. He said, protecting your capital is much more important than making money. Basically, because if you lose your capital, then making money is much harder. Missing the train versus losing your money. There are a lot of trains, but if you don't have your money and it's gone, it's over. You can't catch a train, right? So that's kind of how you really want to think about it. You need to be careful with protecting your capital. And the best way to be careful with that is to literally buy uptrends. Don't try and catch falling knives if you don't have to. Unless you're going with a small amount of money, then that's okay. All right, moving on. We have Bitcoin on the 4-hour chart over here. You got all the EMAs are currently still angled down, the ones that matter to me, which is the 21, the 50, and the 200. So the short, medium, and the long-term EMAs. I had this range, and I said, look, well, we probably need to clean this up. So to clean this area up, I'd probably just move that back down. I don't think that level is really relevant anymore. I would say that this is most likely going to be your new range high. Is going to come in at about 21,000. Let's move this to the top for you so you can see it nicely. Make it big, 20, bold, and then you got your range low. Same thing, 20, make it bold and move it to the bottom. Okay, so you got your new range high and you got your range low, which is the test of the previous low. Let's see how price reacts within this level. I think there will be a lot of people that will take bids over here. So price will come down. They'll probably bid. It might even go through. You see some sort of a deviation over there and then start targeting back to the upside like that. So the market is going to be very volatile over the next couple of months. And that actually provides a magnificent opportunity for those of you who do know what you're doing. So that's it for Bitcoin. I'm going to go into a couple of other charts over here. These are some of the top requests that we got on the previous stream. So I thought, well, let's just make a chart on these. It will also be in the daily candle newsletter because I can see on the screen there that the writing is a bit small. So I'll read it out to you. But the ones that I have over here is Matic, okay? Let me zoom out. I want to give you a bit of perspective. You can see, by the way, all the momentum oscillators are pointing down. But if you zoom out on Matic, this is kind of the picture, right? Now, it's already been knocked quite far. So if I take it from there to there, Matic has already come down 84%, but the primary liquidity zone that I have outlined comes down to that level, which is about 92%. And this is typically the sort of sell-off that you would expect to happen by the time these coins get to the bottom of a bear market. And you can look historically, it's on average between about 90 and 99%. Now, why that's important for you to know is because, yes, we've come down a lot, but if you take from current level down to there, that's still another 56% drop. It's an enormous drop. And what I'm seeing over here is this. Let's zoom into that. This is what I'm seeing over here on the daily chart. Your main range high area is coming in at 74 cents, and pretty much this continues to remain in a major downtrend unless you start to really reclaim and hold above those levels. You have your diagonal that's governing the lower highs and signifying further distribution within the market, all right? Your next support area comes in at 37 cents. However, I don't expect that that area will necessarily hold, especially if Bitcoin is to go lower. So long-term bids, I would most likely set orders between 18 and 24 cents. However, as I've outlined in the daily candle newsletter today, when price starts to approach those levels, so what I do is I will set an alert over here. I'll literally set it right now. I'll set an alert on the support line over there. And then I will set another alert over here on the diagonal. So I don't need to sit and watch this, right? I'll get an email alert when price either hits the bottom or the top. I'll zoom in on a lower time frame and make a decision based on what I'm seeing. Is it an opportunity to play the range, take a long over there and target back up? Or if price were to turn and come back to this level, is it an opportunity to short it back down to the bottom? At the moment, it's in the middle of nowhere. So nothing to do on that particular one. Solana looks a little bit similar. It's one of the top requested ones as well. I'm going to move it onto a high time frame first to just give you a zoomed out perspective of what's going on over here. And same story. Yes, it's sold off a lot, but it can go down further, right? So terrible chart, absolutely terrible. Never trust these VCs. Don't trust the VCs. They always dump on you. You got your primary liquidity zone coming in all the way at the bottom over there. And it's, again, the same thing as Matic, right? It's just distributing. It's setting a series of lower highs on the daily. And you have your main overhead resistance. Now, this is what I was talking about when I said earlier that I really encourage you to draw these horizontals as opposed to the diagonals. A diagonal still works, but it comes secondary to horizontals. Horizontals work much better. You want price to really get back above this before you go long. So if it gets back above that and you hold that area, then great. You can go long over there. Until then, it's just level to level. We just keep working it down to the next level. And same thing. I would set an alarm for the bottom over there. I'd probably actually attempt to take a bid there with a slight stop loss underneath. This would be spot positions, definitely not leverage. And then I would set another alarm here on the diagonal trend line to see, well, if price comes to this level over here and rejects, then that's a shorting opportunity. Okay. Can I explain again the liquidity zones? Yes, I can. Okay. Let's look at a different chart. Let's go to, let's see here on Bitcoin, what I have on this one. All right, I don't want to mess too much with this, but the way, okay, this one, we can use this old one over here. So liquidity zone is essentially an area where price had a lot of time spent there. So if you were to zoom out on something like Bitcoin, this was a strong liquidity zone over here, was the 40K level, right? Because if you go all the way back, this level over here, you have let me use the pen and I'll show you. So you want to look for areas where the psychology of the market was high. It changed, like the tension in the psychology of the market was high, and you can tell that that area has a high level of tension because it's met with wicks. Okay, so you got a wicky area over there. Let's just move this up. So that's one. You have another area like that over here, another wick. You have another series over here. Price came again back there, it paused over here, more wicks, and so forth. And that is essentially how you can find these liquidity zones. It's for the most amount of touch points that you can find within a particular chart is how you spot those liquidity levels. So I think that answers the question. You can definitely do a bit of research on that. But I just want to quickly touch on this chart over here. So let's quickly zoom in. All right, put the EMAs on. I just want to see if I had anything over here for you. Okay, not much to mention on this one. That's Ethereum. I want to go into the charts that I covered yesterday, which was I outlined on the Crypto Shorts channel an opportunity to go short, and that was on Ethereum, but it looks the same on Bitcoin, right? So let's go straight to Ethereum. Okay, so also again, guys, follow me on Twitter because I did outline everything over here. I said here for the guys who just watch the show because, again, yesterday was just a bad day for internet to cut it out. I gave you invalidation. I gave you 3 staggered orders, your 2 TPs, 50% that you'd close at 945, other 50% at 890 with low leverage. Okay, so if you did take that trade, you definitely should have been stopped out. Last night, there was a $1,000 pump in Bitcoin, which happened over a short time frame, over just 15 minutes. So I'm going to move this onto a 1 hour quickly because actually we were looking at it on a 15-minute, just so you can see how this unfolded. Okay, so the orders were fulfilled over here, and it wasn't looking too bad. We only got 1 order filled off of the wick, and pretty much you would have been, I wasn't awake, or I would have moved my stops into break even, but with 3x leverage, I would have been up about 12% in that region. And pretty much you should have too if you took the same thing. And then you got this candle over here, which pushed straight through and invalidated everything. So I don't consider this necessarily like a failed trade or a bad trade. A good trade is a trade where you have everything perfectly outlined. You control your risk really well. If you controlled your risk well, like I did, you would have lost less than 1% of your trading account. I'm very happy with the way the trade played out. Now I just need to reevaluate for the next one. So when you look at this on a 1 hour chart, what I'm basically seeing is that this was a liquidity hunt. I am going to delete all of these quick because I just want to clean this up if that's okay with you. Okay, I essentially see this as a liquidity grab over here. It most likely has a lot to do with the quarterly close that happened. So, you know, big hedge funds and things start rebalancing and move money around. And I don't know if something happened like that. Anytime that you're going to take a trade going into a quarterly close is going to be risky. But pretty much anybody that had stops, some people may have been in the short position for a longer period of time. They would have had their stops in that area, and that liquidity was completely grabbed and prices coming back down. So what do I think now? Well, to be honest, I don't really think much has changed. I would wait for a little bit more clear sort of guidance on what price is going to do. But I do believe that all the risk continues to remain to the downside, and pretty much this trade is still valid. You consider this your main liquidity area over here, and there was a deviation above that, and price is coming straight back below. So I want to watch this for a little bit longer. I want to see how price is reacting around here, if it's going to truly flip this area of that was previous support into resistance, and then things will continue back down. So
who let this bear who let this bear take over the channel? Move over. I'm in control now.
Okay, go for it. I'm basically done. Go for it.
Okay, so I don't know who let this bear. Hold on a second. Okay.
Show us your charts, man.
Okay, let me show you the charts. Okay, so this chart is bullish. It's going up.
Where?
Can you not see that?
Is it inverted?
Can you not see it?
No, I don't see it.
I really don't know who let him take over the channel and become a bear. He's made Banter into a bear channel.
It's fine, man. They're saving money. It's good.
You see, everyone's saying, thank you, Ron. Thank you.
We'll have opportunities to long soon.
Now we love Kyle. Kyle is the yin, and me and Sheldon are the yang.
Okay,
So
two yangs versus one yang. Sounds unbalanced.
Yeah,
to
because
me.
bro, you're such a bear.
So basically, we need to get another bear in the house.
You're such a bear that we need two of us to balance you.
I've corrupted James. He's a bear now too.
If you sit in this office for long enough, anyone can become a bear.
Okay, guys, so pretty much that is it. That comes to what's going on at the moment. Look, trading over the weekend is a little bit difficult, so I'm not actually going to really make any sort of calls. I do think risk remains to the downside. And if you read, there was a, let me see if I can find it, from Arthur Hayes. I'll try and post this on my Twitter. Arthur Hayes was a top options trader and derivatives trader. He was actually one of the first people that started BitMEX, which, let's see, Arthur Hayes. I'll post it on my Twitter. Go have a look on my Twitter. There is a potential that Monday is going to be very, very rocky. And one of the reasons being is because it is the 4th of July, which we know is a massive US holiday. So that means most of the stock markets are going to be closed. So the futures market on crypto also closes, which is what the institutions tend to trade. So the liquidity in the market is very low. And that means that you run the risk of very high levels of manipulation. Rand called himself the feminine side. Yeah, no, he is a little bit feminine. So we have to forgive him. But that's it from me, guys. So I try to make up for yesterday's missed stream that got all messed up with the sound quality. So it is a little bit of a longer one. I will also do a following update on the Crypto Shorts channel, which is going to be quick. It's just going to be about a 3 to 6 minute video. And then that will be later on this evening, or for you guys, it will be in the afternoon, just so that we can see if anything has changed in the markets. Please make sure that you have a look as well. If you go onto YouTube and if you just go onto the Crypto Shorts channel, you can do it also on the main channel now. If you have a look in the link below, you'll find all my social medias as well as my BYBIT referral link. And you can subscribe to the Daily Candle newsletter, which is where you get a more detailed approach of everything going on in the market. And pretty much, guys, that is it from me. So have a absolutely fantastic day, a great weekend. And for those of you who I'll see later on the Crypto Shorts channel, I'll update you as much as possible there. But until next time, trade well and be safe out there, my friends. Cheers for now.